Hey, what's up, guys? Before I start this video, I'd like to ask you guys to like, comment, and subscribe. So I haven't talked about the stock market within the month of the actual full video. I do post short form content on my YouTube channel, which is these TikToks here, our weekly update on what we've been doing. I stopped pretty much posting sport content on here, but we're now focusing specifically on the stock market, on our short form content on TikTok as well. We're doing pretty well on those TikTok videos, which I am happy about. But I want to share to you guys my account and what's been going on since it's been a month since I've done an update. Here we go. So first of all, I want to express some of our goals. So I do have Robinhood Gold, which Robinhood Gold is paying a 4.65% interest rate, but I do pay $5 a month for this service. But the reason why I'm using Robinhood Gold is because Robinhood does give you good amounts of margin. So Robinhood gives me literally 9,290 dollars, which I use 8,600 of that this week. But why did it give us that money? It's because they actually have like an interest rate set with it, right? So their annual interest rate, if we are holding a stock or some value, is 7.75%, which is actually pretty high. So I don't want to actually hold shares. I don't want to hold anything with Robinhood with the margin money. I want to have stuff with my own money, so I'm not trying to use that margin. So I'm trying to extend contracts if I need to, if I have to, which I haven't had to yet, but we do have one pretty good contract this week. So what I've used that margin for is this Coinbase put. So I sold two puts on Coinbase on the 43 strike. I sold this for $54 per contract, which is $108 profit. Right now, you can see that we're 74% up, and we literally have like technically market close today is Tuesday, so we technically have Wednesday, Thursday, Friday. We have 3 days for this contract to be completely over, and we profit our complete $108, which is awesome because we are still trying to reduce our losses, like I explained before. We're taking these two contracts here, the ones we did this week. We're adding these two up and we're adding that to this complete loss right here. We bought these shares technically at $36, but we've got $700 of premium. So we are reducing our break even cost to right now we're at 28, but if we add another 100, we'll add 100 1.08 plus 1.08, which would be our contract. We are now at 27.2, and that means that we're at $1,600 loss, almost $1,700 loss. That is what we're trying to do and get this down to zero, and hopefully sell these shares out, and we'll go and buy more long-term shares. But speaking about long-term shares, let's see what's been going on with our long-term shares because these are the ones we want to hold pretty much forever in the sense. I do still sell covered calls on them just because that's extra money coming in added with its dividend that it pays every 3 months depending on the stock. So right now I have 400 shares of Ford and 100 shares of Bank of America. These Main Street Capitals and Avi, I want to buy more of these in the future, but not right now. I want to invest into other stuff. First, our Riot, our Fubu, and our Hood. These are not dividend investors. These are the ones we want to get rid of as soon as possible. Avi, maybe we want to add more, and Bank of America and Ford, we also might want to add more. But I am thinking of buying different shares. I actually made a list of shares I might think of buying pretty soon, actually. So let me go into first Bank of America because it hasn't been doing anything crazy compared. So last month, because we go 1 month out, Bank of America is pretty low. I bought 100 shares of Bank of America. Yeah, I bought 100 shares of Bank of America here. And I bought, right now we are at a $46 loss, which is okay because we're also getting a dividend on June 30th. But on top of that, we also have sold covered calls on the shares. So we'll look at our little history of covered calls here. We've made $17 here, $4 here, $20 here, 15 here. So we're made money to make some return on our investment. So we're not doing bad. Plus we're getting paid our first dividend with Bank of America, which is nice. $22 was it? Yeah, $22 dividend, which is nice to have on there. We did get a contract before that expires 7/7. We did buy a covered call to sell our shares at $30 per pretty much yeah $30 per share, which we get 3K back total. But we don't want to sell those shares because we are hoping to get those dividends and cover calls. Right now, our contract is doing pretty bad because we bought this when Bank of America was a lower at a lower price. So I bought this contract at $17, and right now it's almost $50, which is okay. I can still extend the contract or roll this position, but we still have time because our contracts to sell at $30. We right now have like a 60 cent leeway from it needs to go up 60 cents pretty much. So this position goes bad for us, but we could always roll it and extend this position to a week further, so we could extend it to the 20 or the 19th, the 14th actually. We could extend this up here. We want to technically extend it to the 30 because then we would technically not lose money, but we would extend to 30, which is a higher risk if we are going to have to sell our shares, which is okay because it is 7-7. We're right now at 6-13, so we still have a lot of time for that, which is okay. That's what's happening with Ford. Let's look at Bank of America. Let's look at what's happening with Ford. So currently on Ford, Ford has exploded on the last month. I'm looking at the monthly because it's been a month since we've looked at this. And if you guys only watch my short form content, leave a comment below to just to see how many people are watching both video formats and the short form content, because this is going to explain what's going on with those short form content videos as well. Because first of all, I have 401 shares of Ford, which is total return today is $148, and total return since I've owned these shares is $915.20, which is almost a 20% gain. Which usually people like selling at 20% gains. Not shares, I'm talking about more options. But the problem with this is we have a cover call that's selling next Friday, gonna expire next Friday actually, at the 12.50 strike, which is bad because I did not buy this for $168. And if we do, we are gonna be forced to sell our shares for 12.50, which is still above our average cost, but we don't make as much as we would, because that would technically mean we make about, let's say that's 90 plus 10, that's $10. We make $60 on the shares, everything we've made for cover calls, and our first dividend payment that was I believe that was recent. Let me look. Yeah, our first dividend payment was June 1st, so 13 days ago. We got $60.15, which is about 15 cents per share, which is nice. It's a good dividend payment. But we are at risk of losing our shares, which I do not want to lose our shares. So we have a week to pretty much roll our position, or we could let it sell off, which we don't want to sell off because we want to keep getting that dividend. So what am I going to do with this? I am thinking of adding up our last payments in our cover calls. So our last cover calls that we made for this, we made one May 22nd. We did it one at the $12. We made $12 on this one. Then we made $9 on $9 times 327. So we've made roughly, that's 3, 7, 8, 9, $39 in this. I do think I'm gonna extend some of our contracts and maybe move one up. And how I'm going to be doing that is I'm going to be adding this $12 and $27. So how I would do that is I would go, let's say here. So we would do 0.12, or we first we'll put equals because we got to do the equals. 0.12 plus 27 will be 0.27 actually. And we would get $39. Let me change this. There we go. Let me bold it out. So we would have $39 of premium so far, which we would take off of our profit to not be profit, but to be able to move our contract further. So, or higher up in price than the 12.50 that we have it currently at. So then we gotta look at how can we make money. How can we make more money to make it a 50? We want to make it $50, so we could in the sense sell 100 shares at the $13 strike. So we want to make $15. So we would also want to roll some of our positions. Maybe we could roll all of them, and then we'll see. Let's look at the roll. We would want to roll them. Technically, the 30th would be another week. We would still want to keep some at this price. Let me continue this. So we would make about 5 per. Let me do 3 because we have 4. We would make $15 on that. Let's add the 15 to this, plus 0.15. So you'd have $54 there, which is good, right? Because in that sense, next, instead of we extend 3 to this price, but I would want to extend 1 to the price of here. Why? Because we get a 50-cent leeway, and this is we're going to be debited $45. So if we do this, it's going to represent that we will lose we would lose $45 on this trade, but we move up our sales to $13 then instead of the $12.50. So we would then minus, in the sense, minus the debited of 0.45, and we would still be at a 9-cent profit between the contracts we've done, and between our future contracts we would be up currently 9, which is not a good thing. Still, we are at 14.50. We need to get to 14.50, and then we would have to sell the other ones for this price, which is actually not a bad idea, because then we would have a $9. We have a $9 leeway to do the next one, right? And then once this is over, we would keep doing that over and over and over again as much as we can, until the point where we could get up to this 1450 here on top here, which would mean that if we get to this point, we would be good, because technically we would be good because we are over the price and we don't want to sell our shares. So we are hoping for shares to go down a little bit so we can get better contracts. But this is a current idea, so I don't sell my shares, just continue rolling them till I possibly don't have to. I won't be making profit, but that doesn't matter, because we still, like I said, we still have these 100 Bank of America shares, and we might have the same issue with this also. But we also do have these cash secure puts we're doing with Coinbase, but those we're not using to fix our Ford shares. We're using those to fix our Riot, Hood, Riot, and Fubu shares. And the reason why is because we want to get rid of these shares also, and hopefully move on to dividend stocks like I am doing now. So another thing I want to say is, because of this error here with Ford, or this problem with Ford, I do want to keep increasing my capital, like my actual cash capital. I did think about, let me do 2.5, and then let me invest the rest. So right now, 5, 6, 7, 8. We have $300 to reinvest into other shares. I'm not gonna do that. I'm gonna increase this value maybe to $3,000, $4,000, or $5,000 before I think about buying more shares. And that's just for me to be more careful if we do end up getting to this position here with Ford again, or with Bank of America. We have more money to try to fix our problems, right? But I did make a list of shares that I do want to probably maybe buy in the future. So first, MPW, Key, Fitbit, Bank of America, we have that on the list. Intel, HPQ, USB, Main, DGRO. I did organize these by price. Price might have moved a little bit, so we probably have to change that. DVN, GPIO, SCHD, BBY, CL. So all these shares here, I want to eventually, at one point, have 100 of them, so I could still sell covered calls, and also not even only sell covered calls, but also make money off dividends. That's the basic idea. I'm not too sure about these two bottom ones. I added these because they're kind of like the lower end stocks, $9, $10. I do want to try to buy similar portions. Well, I want to buy 100 shares of this, but I want 100 shares of this that could equal our Bank of America shares. So technically, I would want to buy 300 shares of this that equals 100 shares of our Bank of America current, right? And I also need to add Ford to this list too, because I haven't added Ford yet. But the reason why I'm not liking um, this stock in general is because of the 5-year chart. It does show 2018 was at $13. It peaked at 20. It then peaked again at 20, and then now it crashed all the way down to 7, which that's something that I am not too fond of, because it just shows that the stock has no strength to go up. It keeps going down, down, down. Plus, it's paying dividends, and usually when a stock pays dividends, it is said that the share price goes down because of that. We could go to Key. Key is the same thing. This is another bank. It has the same sort of chart. It was doing good at the start, had a big crash, then it picked itself back up, then it had another big crash and hasn't really recovered much since. So that's why I'm kind of like, I don't know if I want to invest into these, but I might want to do that with other shares. For example, Fitbit is actually not too terrible. I was looking at the 5 years, and it does show that okay, it was at 29, and then it dropped all the way to 12, but then it recovered a good amount from that COVID crash. Then it peaked at 40, $50, and then it continued going down again, and now it's at a point where It might continue to go up at the $25 mark, but that's similar of a chart to what Bank of America is, and I already have invested sort of a good amount of money into Bank of America. So it has a similar chart to Bank of America. Like the COVID crashed and it went up to its peak of around 50. Now it's back to like $30. So that's why I'm looking at those shares. If I might not think of investing into those, I might just keep doing my Bank of America. I do want to get into Intel. This is Intel. Intel has a pretty bad chart also, I believe, but Intel has a lot of potential in the future. And I need to definitely look into more of the investment purposes of these shares, because Intel I think crashed mainly because they reduced their dividend payments, which is okay because the main thing I want to be able to do is collect premiums from not only dividend payments but from covered calls or cash secure puts. So, like I said, for now, guys, this is my portfolio, and I'll definitely check you guys out on Thursday. I'll see you all Thursday. Bye.